Okay, in terms of vols, looking at realized vol, we had that little pop on last week when BTC dropped. That took realized to about 40. It's kind of flatlined at about 40 since then. And then Ethereum realized has just been drifting lower and lower, as you can see here. So we've actually got really positive carry now in Ethereum, nearly 20 vols of positive carry, whereas we're more close to neutral in Bitcoin. So really, Ethereum's the one with the juice if you want to be a gamma seller, but that's because people are scared that it's going to have this big move next week. So that's why it's staying like that. Now, I think it's like if it's going to have a big move next week, it's going to be to the upside, not the downside, because they're probably going to give it a little bit of. I suspect they're going to give it a bit of the benefit of the doubt for the inflows to come through over a few days. So I think selling gamma is fine if you strike it to the downside on Ethereum, but maybe be a bit careful of selling too much upside gamma for next week. 4th of July holiday this week, so don't expect a massive range break this week. Expect these tight ranges to probably hold, and that event has been rolled into next week. Macro data points are FOMC minutes and non-farm payrolls on Friday, FOMC minutes tomorrow. So, if they're materially different from expectations, sure, they could move the market, but that's not really going to be our base case. Looking at the term structures, you can see big shift lower in both assets. So we got those front end vols down 8 to 10 vols in the front end there in Bitcoin. Ethereum, the weekly Ethereum, like the one expiring this week, is even more because obviously that's moved from being the event vol to not being the event vol. But in general, similar moves in kind of the 1 month around 6 vol points, and even the back end getting hit 5 vols in ETH and about 3.5 in Bitcoin. Call skew wise, all seeing softer call skew by about 1 to 2 vols across the curve. See here, but we do still see skew steeper for calls in Ethereum, which shouldn't be a big surprise if people are expecting some sort of knee jerk higher. Looking at the vol spread, a little bit of a drift lower in the vol spread, but it is still pretty elevated. Realized vols collapsed in the spread, so you've actually got -5. Means Bitcoin's realizing almost 5 vols above Ethereum, yet Ethereum implied are more than 10 vols above Bitcoin implied. So very big dislocation there in terms of implied versus realized, and that's because implied is forward looking. It's expecting a big move in Ethereum, which is why it's like that. Now, once we get our move or not move next week, then you would expect some sort of reset in this spread, given where the realize is coming in. Wouldn't be surprised to see this resetting at least 5 vols, probably going to go well below 10. Who knows? It might go even further. It really does depend on what Ethereum ends up doing. The Ethereum Bitcoin spot spread has been consolidating this week. It still looks like it probably wants to break higher. It's holding in quite well. No real technical damage has been done. If we get the inflows, then that's your catalyst for the break. So you got to probably think that's probably the most likely outcome. And then once we get the launch and whatever the move is, the knee-jerk move on the launch, we are likely to get this vol reset in the spread. And then, as I think many speculators are already kind of in and out of this trade. So the rally, if we get a rally in Ethereum, it might not be a really fast one because speculators will kind of are done with it. And maybe it's a case of as the inflows come, it just becomes a grind higher. That is possible. Remains to be seen, but that's one potential scenario why vol doesn't need to explode on Ethereum if that's the type of move we end up seeing. Looking at skew, already mentioned call skew coming under pressure this week as the rally didn't really have any follow through. Upside calls still getting sold in a variety of structures, and therefore that's putting pressure on the call skew. ETH call skew holding a premium over Bitcoin, but it did soften by 2 vol points across the curve, which is a reasonable amount, suggesting some may have thrown in the towel on a big rally for the ETF launch and just couldn't stomach the bleed anymore. BTC front end skew is in small put premium out to July expiries, as there is still some risk in people's minds that we could break 60K and go to 50K. So people may be wanting a bit of protection against that scenario, and it doesn't cost you that much given that front end vols are, on like a sub 40 level. And then these skew term structures are quite steep. So whilst you've got fairly neutral skew in the front end, as you go longer out, it goes to a steeper call skew of about 5 or 6 vols for calls. So still seeing that term structure there in skew. Strategy compass wise, pretty middle of the road in terms of strategy compass. But yeah, like I said, neutral vol carry on Bitcoin, very positive vol carry on Ethereum, suggesting that that is where you want to be selling the vol, if anywhere.
Hi everyone, thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up for a free 1-month trial at options-insight.com. I'll see you soon.